Hi guys, how are you? Welcome back. Let's do another video. And First of all, my family is still in Kharkiv. Uh, they're safe for now. It's 3 weeks now that this has been going on. Very stressful, as you can imagine. Some good news is some of the troops have been pushed out of Kharkiv. Some of the Russians have been pushed out of Kharkiv, which is good. But the bombing of the civilians is just relentless. I'm talking on the phone and I can hear bombs going off in the background. It's a disaster. Honestly, if that's not crimes against humanity, I don't know what is. Honestly, I just don't know what constitutes crimes against humanity and war crimes and so on. All right, so let's get with the video. You had a little bit of a breakout in this structure here. Right, 1, 2, 3 down. It's a little bit wedgy. Okay, and what happens when you have structures like that? They go in the opposite direction, so you get the breakout. Fair enough. All right, fair enough. So what happened this week? Well, one, we got the Fed, and every time there's a Fed meeting, for some reason markets go up. Um, and you end up with a Friday market is going down, short covering. One thing feeds the other, and you got a breakout, and that's okay. Now for new guys, and this is new for in anything in life. If you're new to something, you kind of react to things, right? Uh, it's the same thing in markets that people just react to things. The more seasoned you become, more experienced you become, the less reactive you become because you know what you're doing, right? You see what the chart is telling you. You understand the economics. You understand what's going on. So you tend to be more proactive. Okay, you hedge properly. Um, you don't get too excited about these kind of moves. You think about everything in a different way. So, I said don't pick bottoms, right? Go look at that video. Okay, look at this move, right? Oh, it's going to zero. Oh, it's going to the moon. Oh, it's going to zero. Oh, it's going to the moon. Oh, it's going to zero. Oh, it's going to the moon. Okay, these are very big moves, huge moves. Uh, but you don't want to get caught up in that because you may get one or two trades going your way, and then you get, or maybe even five or whatever. But one time you're gonna get wiped out, just just like that, and that's why you shouldn't do it. And probably by now, at least some of you probably now understand why I said don't try to pick bottoms. Okay, don't try to pick bottoms. Now, ideally, you want to have a nice boring market with not too much excitement. It's trending upwards, looks great. You want to go buy that, ideally. Okay, this is not the time to be making market money in markets. This is a time to observe and learn, because you're not going to get too many bear markets in your life. I'm 52 years old. I've had three major ones, right? 2000, 2008, and we'll call COVID, quote unquote, whatever, quasi bear market. All right. So study, so you know what it looks like, what it feels like, what it tastes like, what it smells like, because the next time it comes around, maybe you'll be older, you have more money. You don't want to be playing around with this, okay? Because it's going to hurt you. All right. Couple of things here with the charts. All right. You had a higher high, a higher low. Sorry, you had a higher low. Came down and broke this low, and from failed moves further down, from failed moves comes fast moves in the opposite direction. Classic, classic move. Okay. Um, it broke the structure. Great. It's corrective now. Let's say this is corrective. How much can it run? I don't know. Okay. It can run like this and then fail. It can be an expansion, meaning come Monday, this thing tanks. All right. There's a number of things that can happen. You don't have enough information. Now, the support and resistance guys, the guys that are like, oh, I broke the line, go out, buy, 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 buy. Well, how many times has that happened in the past and it failed? And I'll give you an example here, right? You look at this one. Oops. Look at this one. Everybody went out, bought because it crossed the line, and boom. Then they bought this one, boom. You see what I'm saying? So I don't know if this is going to be something similar, but it'll just fail here and start going back down. All right. So let it prove to us what it wants to do. Let it prove to us. For right now, to me, this whole thing is a one. Right? This is a possible two if it runs a little bit more. Okay, and then we'll get the three down. That's the way I would look at it. Longer term, if it were to continue to go further higher. Um, if not, if this is just an expansion of the structure, then come Monday, Tuesday, Wednesday, whatever, it kind of does one of these things and then starts to fail. Okay. We don't know. We don't know which one it's going to be. And then it will look something like this or whatever. Something to this effect. And then it kind of stays in that channel and just kind of keeps going down. All right. What else? S&P 500, kind of the same thing. Okay, small caps kind of broke out. Um, Again, it's below this structure here. All right. Now, taking a look at the total market cap of cryptos, they haven't quite broken out yet. They're trying to. The way I would look at this, and I'll show you Bitcoin here. I'll give you guys a little freebie. Okay. The way I look at this is more of a drop and a wedgy looking sideways kind of move. So you got the big thrust down move. 1, 2, 3. Right. It's kind of compressing here, building pressure. It can go either way. It can go up or it can break down. Right. Now, typically I would say that this would be the compass, right? That if it's coming down, usually what ends up happening is this is going to resolve to the downside. So it would look something like this. 1, 2, 3. This whole thing here is a 2. This is a 1. And then you're looking for a 3. All right. That's the way I'm reading it. Okay? I don't like wedges. I hate them because they break one way and then do the opposite. That's why I don't like them. Ethereum, more or less the same, only this one has broken. Okay. But again, just the crossing of the line doesn't tell me a whole hell of a lot. I don't get too excited about that. All right. Taking a look at commodities. Okay. We've talked about this, and I've showed you um, way back when it was all the way over here that this was bad juju. I had this in here for a long time, and it says, look, you get high inflation, you're going to start getting global social unrest. Look what happened. Commodities started to rise, and it's not just the price action. So you might be thinking, well, it wasn't quite as, commodities were not as high here as they were here. Well, true, but the speed or the rate of change at which commodity prices rose matters. It's not just price alone, it's the speed at which it rises over time, right? It's the rate. So, again, it was Arab Spring this last time. This time is, a nuclear power trying to take over and bully a small, peaceful sovereign nation. and that's not going to fly. That's not going to fly. All right, so it still looks very bullish. Okay, taking a look at the dollar. Okay, I think the dollar possibly can start to come back here because the interest rate hike was not all that significant, 0.25. It's nothing. It's symbolic, if anything. Um, Look at the 10-year, right? Now, on the 10-year, I was kind of warning about it. Kind of look like this, right? Again, this is the compass. This is one. This is two. Okay, and now it's breaking out three. Now, again, this is kind of wedgy. I don't like wedges, but again, it's coming from the bottom. This is one, and it has broken out sufficiently. Okay, so it's what 2.15%. All right. So look for this one to continue to go higher. Taking a look at the twos and the tens, this is now a signal for a recession. Now, I want you to pay attention that last time it was this low, it took a very long time before we hit a recession. And again, I'm going to remind everybody it wasn't COVID that caused the recession because the US was officially in recession in February prior to COVID. Look it up. All right. So this could go inverted. Um, it may not take as long as it did last time because the speed at which it dropped was ferocious. It wasn't the same way last time. It kind of like slowly kind of came down, right? So this one came down very fast. Again, the rate of change matters, not just the prices. 2 year, okay. Remember repos. Repos started here, okay. What's a repo? I'm sorry, reverse repo. Reverse repo is the opposite of QE. So the market found a way to undo QE way before anybody else even saw it coming. Mortgages screaming higher. Rate of change matters. Um, the 30-year, okay, and here's the 2 and the 30 screaming towards a recession. In this case, the higher it goes, the more likely you're going to go into a recession. So just kind of keep that in mind, right? That we may get some good news that the war is over. I think that it started too abruptly, and I think it's going to end abruptly. I really think that. Um, and that will cause the markets to go up. But remember why we started to go down to begin with inflation. Well, inflation is going to be far worse now than it was before, thanks to the war. Real supply chain problems, not the garbage they were telling you before. Oh yeah, we have inflation because of supply chain. Oh, because of transitory. Oh, it's transitory. Oh, well, no. This is going to be real supply chain issues. And the longer that this goes on, the bigger the problem we're going to have economically. So while the market may go up because of Russia ending the war and they admit they screwed up and they got their butts kicked, um, that would be bullish short term, but the economic problems behind it are still there. So I don't think it's going to be lasting for very long. In fact, I would say that it'll probably go up for a few months and then start to go back down again. All right, until those economic problems are resolved. So keep that in mind. All right. Somebody asked me about Tesla. What do I think about Tesla? Well, what's there to say about Tesla? Does it look bullish to you? It doesn't look bullish to me. But again, if you're new, then this move is going to be you're going to react to it. You're going to say, "Oh, look, it's straight up." Well, it was straight up here too, and here, and here, and here. but it's down. Okay, there's nothing really to talk about. So I don't know what to tell you beyond that. This is double top. Okay, there it is. Get some moves that are going to try to provoke emotions. They're going to try to make you second guess if you're short or if you're long and you want to be a bull. You're going to FOMO. You're going to run out and buy it, and that's why these moves are so ferocious, because they want to provoke emotion. And emotion to inexperienced guys is deadly, deadly. I'm talking about the account, right? It'll blow your account out before you can blink. Lastly, we'll talk a little bit about gold. I know there's a lot of people that love gold and so forth. Well, again, I'm going to point out that when people were asking me what do I think about gold back here somewhere, right? I said that when gold breaks out, you won't be asking me because it's going to be self-evident, and it is. Okay, so it got very euphoric. It, blew out straight up vertical, double topped, and is now correcting. Now, is this one of the classic double top that I've shown so many times before in the past? I don't think so. I It can be. I'm not willing to call that yet. I think there's still more upside. Um, Now, if there is a ceasefire abruptly and everybody goes back to their corners and everything starts to recover, I think yeah, in that case, this is going to fall. This is going to drop. Okay, then you'll probably end up with something like this, which means what? Lower gold. Now, gold went up because of geopolitical reasons, not so much because of inflation. So keep that in mind. Keep that in mind that it really matters to gold what happens geopolitically, not so much on inflation, believe it or not. Oil, do you really think that even if everybody goes back to their corners, that, oh, okay, let's all run back and start buying Russian oil? I don't think that's going to happen. Okay, I don't think that's going to happen. So I think there's still more upside to oil. I don't think this movie is over either. Again, even with a ceasefire, you might get some kind of a pullback that's deeper. Okay, it could do something like that and come all the way down to, I don't know, about $80 or something. But then I would look for a bounce. So if you were to look at lumber, for example, right? Remember lumber? It went parabolic and then just collapsed, and everybody's like, "Oh, see, it was transitory." Yeah, the lumber market is telling everybody what's going on, and then what happened, right? Boom, straight back up. Right. So, yeah. Again, we're not out of the woods. We're not out of the woods. Even if there's a ceasefire, and I hope there is. I do. I really hope, and I think it will be. But whatever. So that's it for this video. Be very cautious out there. Don't be reactive. Learn how to be proactive, and the way you learn how to be proactive is to observe, is to learn from this. Because again, in your lifetime, you may only see two, three of these quote unquote bear markets. So you don't get a lot of experience in bear markets. I know the first one I was completely zero experience. The second one I thought I had experience and I got my ass kicked. And this time I'm a lot better at it, a lot better. So I'm giving you my my experience. Maybe you're better than me, but I hope you avoid my mistakes. Okay. So that's it for this video. Thank you very much for your kind words. I hope you have a great weekend and a great week next week. All right. Take care, guys. Bye bye.